In this video, I'm going to show you how you can make money in a crash, and it's a strategy from a fund manager that I've learned, and I want to share it with you. All right. So, let me show you my other screen in here. The strategy is really very simple, and I'm going to show you how it works across different market conditions. Okay. So, for example, had you done the strategy on SPX back in 1987, right? You would have avoided a 25.78% drawdown because you would have been out of the market as early as December 7, 1987. Okay? And you would have avoided that big drawdown of almost 26% in just a few days, right? So that's one. And then on the QQQ, you would have avoided the 2000 crash, and you would have saved yourself a 52.76%. Actually, no, sorry. You would have saved yourself a 76% drawdown. All right. And then on the Dow Jones back in 2008, you would have avoided a 44% drawdown. All right. And in the TQQQ, which is the triple leverage ETF on the QQQ or Nasdaq 100, you would have avoided a 71.22% drawdown. All right. So what is the strategy? Well, you have to look for um, the when the price of the stock is below the 50 EMA, which is the one in the green, right? And that the 10 EMA, which is the one in red, is below the 20 EMA, okay, then you shift to this strategy that I'm going to reveal to you right now. Because if the price of the stock is below the 50 and the 10 is below the 20, then it indicates that the market or the stock is going to be bearish, which in this case, that's exactly what happened, on the TQQQ back in October, back in 2022. Actually, not in October, but in January 2022. All right. That's exactly what happened on the Dow Jones back in June 16, 2008. And you would have avoided again a 44% drawdown. That's exactly what happened in, back in October 2000, and you would have avoided a 76% drawdown on the QQQ. And that's exactly what happened back in December 7, 1987, and you would have avoided a 25.78% drawdown, right? So when the price of the stock is below the 50 and the 10 EMA exponential moving average is below the 20 EMA, okay, and I'm using the weekly time frame in here across all those charts that I've shown you, then it indicates that the market is bearish and you have to get out of the way, meaning you cannot go long. Okay. And the strategy that I want to share with you right now in order to take advantage of the big drawdowns, right, is using a simple option strategy called buying a put. All right. So more specifically, the put, okay, is basically an at the money put. All right. So when you buy an at the money put on Robinhood, this is how it works. So for example, 21 days to expire or about 21 days to expire, right? And then you choose the at the money put. In this case, at $681 is the strike price. You pay 1,177. And worst case scenario, you're wrong. Then you lose the entire investment. But best case scenario, you are right. You know, then you will make money, right? So obviously you only do this when you have a high conviction that the market is moving downwards. That's why if you notice here, for example, right, we only do this when we have a big drawdown like this, right? So this strategy will not allow you to capture the top, right, and the bottom, but you will capture the one in between. Okay. So, and again, if you this is true not just with one ticker, it is true with every single ticker, right? Whenever you have the convergence of those three, the price is below the 50, the 10 is below the 20, most likely you're in a bearish downtrend, right? And now it doesn't always happen that it will be bearish, right? Sometimes you can get whipsawed, so meaning it will trend downwards and then it will trend upwards again. Okay, so that can happen, right? So for example, here, the overall trend is downwards, but then it flipped, right? And then it kind of flipped again here, and then it flipped back here, right? So but the big downtrends like this, right? It is obvious, just get out of the way, right? And if that continues, then you can do the strategy that is, you buy a put, okay? And I backtested this strategy. So for example, this backtesting on the SPX back in, again, we will use the same time frames in here because unfortunately the backtesting app that I'm using from Taste the Trade, the data, it cannot go back to 1987 or 1999 or even 2008. The earliest it can go back is 2013, but definitely 2022 is a bear market. So if we test it on the on the last bear market that we went through, right? Then as you can see here, whereas the SPX lost 25%, back in, from January 3, 2022 to October 1, 2022, right? It lost 25.25%. However, this strategy of buying an at-the-money put option, okay, very simple strategy, right? A 50 delta, 21 DTE put option. You exit 7 days before the expiry, right? And you include one little, this is the secret component in here, right? This is the secret ingredient, so to speak. That is, you exit the trade when the VIX exceeds, is at least 30 or above. Because if the VIX is 30 or above, that means, the market has crashed so hard that the VIX, which is a measure of volatility, or the fear index, other people call it the fear index, if there is peak fear in the market, right, then you actually don't buy the put anymore. You exit the trade because what will happen is at peak fear in the market, the market will recover from that point onwards, and therefore you don't want to basically short the market. You don't want to have a put trade in there, right? Because, the market has probably reached bottom and it's on its way up, right? So if you do that, right, then this strategy on the SPX would yield a 941% return. And the max drawdown, as you can see here, is not so different from the max drawdown that you suffered through had you just held on to the SPX, right? Now, you know, I tested this on the QQQ. Same results, right? 900% return versus losing 33% of your capital had you held QQQ, from January 3, 2022 to October 1, 2022, right? And the same thing is true. In fact, it's even worse, right? Or the result is even better had you used the triple leverage QQQ. In fact, well, the reason why I said it's even worse is because, the TQQQ lost 77% of its value, right, during the last bear market. Whereas this strategy would have made you over 500% return, right? So again, the strategy is very simple. And on the QQQ, now if unfortunately, let's say, so let's look at one of these, right? Let's look at the details. And as you can see here, well, especially on the SPX, right? On the SPX, right? If you look at the details, the average capital needed is 8,820. And of course, not many people can risk 8,000 just on one trade, right? And then on the QQQ, right? If you look at the details, you're risking $900. It's better, right? But still, to risk $900 in a trade, some people may not be able to afford it. But one way to do this is by doing a put debit spread. And a put debit spread, let's say on the QQQ, you buy the at the money put and then you sell the 40 delta put. Okay? See this, the 40 delta put that you sell, and the result is the cost is only $210, right? And if the stock moves down, then you make 390. If the stock moves up, then you lose $210. All right. And if you look at the back testing, I back tested the strategy again, right? This time doing a spread, okay? And as you can see here, 50 delta, you buy the 50 delta put, you sell the 40 delta put, and the result is not as good, but you still made over 500% return, and the max drawdown is again comparable to the max drawdown had you just held on to the QQQ. All right. So yeah, so that's the strategy that I want to share with you guys today. As you know, if this has been valuable to you, right? If you learn something new, something valuable, and you think I've earned it, definitely like this video. And if you want to learn more about stock options, and I'm actually competing in the US Investing Championship for 2026, and you don't want to miss any of my videos, subscribe to this channel. And in the next video, I explained to my daughter how call options work. So if kids can get it, then anyone can. And if you like to learn about call options, explained so simply that even kids get it, watch this next video and I will see you there.